Namaste. Welcome to Bull and Beer. Today we are going to talk about something special again. But before that, how are you doing? I'm sure you are doing good and well. Today I'm going to talk about something which will remind you about your childhood or maybe some stories you have heard about tortoise or turtle and a rabbit in your childhood. But before that, please remember about happy investing. What is happy investing? Any profits you make from your investments, any money you make from your investments, please try to put some part of it for some noble cause. Maybe donate something, put it in charity, help someone in need, unprivileged children, or whatever you think or whatever makes you happy. By doing that, you will get more good luck, you will get more money, you will get more prosperity, and that will give you inner peace and happiness. Let's start our today's video. Slow and steady wins the race. Yes, you heard it right. It is the phrase you have heard in your childhood in the story of turtle and rabbit, where there was a race between a turtle and a rabbit, and finally turtle or tortoise wins the race. So it is the same thing. Today we are going to talk about one of the very amazing mutual funds which is like slow and steady wins the race. This is the mutual fund which is called Parag Parikh Flexi Cap Fund, and previously it was known as Parag Parikh Long Term Equity Fund. Actually, this is the mutual fund which may not make you rich fast and soon, but in the long term it will give you good and healthy profits. And that is why today I have used this phrase, slow and steady wins the race. That is why you will grow your money with this, but at a slow and steady pace. It will give you good returns, and in the long term, maybe next 3, 5, 7, 10 years, you will make good money out of it. In the past, for example, people who have invested 100 rupees, they are able to make 442 rupees. So you can see almost fourfold increase with this mutual fund. Now let's look at little bit in detail. Actually, this mutual fund was started in year 2013. So if you look at this picture, I have tried to divide this into 3 phases. The first phase is when it started, and for a couple of years, those were the years when mutual funds were coming into the Indian market, and this particular mutual fund came in and there was a steady increase. But in the second phase, you can see it increased very good, because that's when the growth story started in India. Those were the years when there was a lot of growth and progress happening. And the third phase again is the growth phase, and now you can see that is when in the last few years it has started to give increase and high returns. Let's look at more in detail last 5 years. As I said, before last 5 years it was steady growth, not that much great, it was normal, not much returns, probably equal to what you get in fixed deposits. But less than 5 years ago it started to give high returns, especially during the COVID years when it just happened, and after that you can see it is giving very good returns, and it is very profitable if you compare with fixed deposits. Let's look at more in detail in the last 1 year. Last 1 year has been very good, because actually this is one of the mutual funds which has invested some of its fund money outside India into foreign equity as well. And I'm going to talk about a little bit more about it in just a minute. Let's look at this 1 year once again, and you can see it has been a very good growth, and it has increased by almost 38.68%, which is pretty good. It's not bad looking at this particular mutual fund, but it may not be the best. As I said, there are mutual funds, if you see my previous videos, especially small caps which are high risk high return, have given higher return. But now if you see last 1 month, you can see a bit of roller coaster, and there is a reason to the previous picture. Actually, the government of India and SEBI has put some new guidelines in which how much money you can invest outside India. They have put some conditions and limits on it. And in this particular mutual fund, which is Parag Parikh Flexi Cap Fund, there was an amount which was invested outside India, and that was one of the reasons for very high returns and high alpha. And even this particular stock was performing when others was not performing in the same category. Now this has been a bit of a roller coaster, and a lot of discussion is happening. Is it good to continue to invest in Parag Parikh, or should you stop it because of these new conditions? Will it be able to give the same level of returns or not? I think I would suggest that don't put all your eggs in basket, which means don't invest all in small cap or mid cap or thematic funds. I would say put a small amount of SIP, or whenever you have some extra cash, put lump sum in Parag Parikh. It will give steady returns. It will continue to give those kind of returns, but again, it will not give you very high returns as compared to some other. So you can keep this as one of the mutual funds. But let's understand more of this in detail. Now, if you see this particular picture, you can see, as I mentioned, it is not the best. It is not even best. It is just a good mutual fund. And you see the category or a similar kind of mutual fund in India, which is Quant Flexi Cap and GM Flexi Cap, compared to this particular Parag Parikh Flexi Cap. And you can see clearly that Parag Parikh is the least profitable or the lowest in these three. Actually, GM Flexi is the best and giving a return of 67.1% in Flexi Cap, which is really very high. And you can see this is the best performing when it comes to Flexi Cap, and Quant Flexi Cap is second, but they both are very good if you really want to make money from these kind of mutual funds. But again, you can keep some small amount of money in Parag Parikh, not too much, because it is not the best, or it is not very good also. It is just in a good category. But now again, do another comparison. I have done another comparison for you where I'm showing you the best of the mutual funds in India as compared to Parag Parikh, and you see the performance is very poor for Parag Parikh. If you see my best, which I always suggest, is Motilal Oswal S&P BSE Enhanced Index Fund. You see that one is 96.2 as compared to Parag Parikh, which is 38, only almost 1/3 of it. If you really want to make money, go for Motilal Oswal S&P BSE Enhanced Value Index Fund. Again, Quant Small Cap, which is one of the best in the small cap category, is giving a return of 70, which is almost double of Parag Parikh. So again, Parag Parikh is not the best, but it is again the turtle and the tortoise and the rabbit story. Slow and steady wins the race. You can keep some money and it will continue to grow, but not maybe at a very high pace. Let's understand more. Again, about 5 years ago, if you see this particular photo, you can see the returns and rankings, and you can see here 5 years ago it was doing pretty well as compared to category average by giving return of 24% as compared to 16.8. Even 3 years ago it was 22 versus 19. But now in the last 1 year, again, due to multiple reasons, it is not doing very good, and it is in just an average mutual fund. And even if you see category average, it's almost the same. So even if you were invested in any other Flexi Cap, it would have been given better or slightly lower, but the category average is not very far from what Parag Parikh is giving. Now let's look at some of the holding analysis. As I said, equity is 85.5 and debt, which here means the amount of money which is invested outside India, which is 13.7. But again, there are some new guidelines because of which the people are a bit concerned how this going to perform going forward. If they cannot invest in foreign equities or foreign derivatives and so on, then the performance may be impacted. It is just based on Indian market, how Indian market and stocks will perform and the companies, and the return would solely be depending on that. But still there is some amount which is 13.7 which is invested outside, and that may still give a better performance if the funds are invested in the right companies outside India. Now this is again something very interesting. If you look at this picture, I have captured it to show you the amount of money which is invested within India and outside India, and that is very important to remember because of the new guidelines, and that is very important to note that. Now this is again an important breakup between how much money within the Indian market, Parag Parikh has invested in large, mid and small cap, and you can see the majority is into large cap companies, and large cap companies have a limit or a ceiling how much they can grow, how fast they can grow, because they're already that big, and the decision making, the bureaucracy and the processes are very complex for them to grow fast. Whereas small cap companies can grow very fast, they can become big, they can become the next Microsoft, Google, Tata, Birla, or whatever. So that is why there is less cushion to play around. But again, it's an average mutual fund. You can invest some small part of money, whether in SIP or in lump sum. But let's look at more in detail the holdings. Which are the companies where your money is invested? Now, why I'm saying it's an average mutual fund, because look at the companies where your money is invested. There are 84 holdings it has, but I have just picked up the top 10, and these companies are all good. Your money is safe, it's not going to go anywhere, it's not going to go lower also, because HDFC, Bajaj, Power, Maruti, ICI, ITC, Coal, HCL, Microsoft, Axis, all of them are very safe, very good companies. They are going to grow, and the amount of investments you have done will grow also, but not very high, because again there is a ceiling in how much they will grow, and again this particular mutual fund will give an average return. Let's look at the sectors. The sectors are also very good financial. As I always say, it's a very growing sector. It will grow further because again the awareness about financial systems, the markets, the banks is growing, and it's becoming better in India. Services sector is very important in India. It is gonna grow further. Energy, technology, automobiles, all these sectors are gonna do better and better in the coming years. Now again, look at this particular picture, and as I have shown before, the comparison. So if you really are keen to invest into Flexi Cap, and if you really want to make good money, I think JM Flexi is one of the best, but I would not recommend that. There is another reason I'm going to discuss in my other video, but for now I will suggest Quant Flexi Cap because of the holding. I would say if you really want to invest into Flexi Cap, and if you don't really want to invest into Parag Parikh, the other best option is to go for Quant Flexi Cap, and you can see clearly the comparison I have done with some category average and some other peers in this category. The other thing is expense ratio. So the expense ratio is 0.62. It's not very high but not very low. We have seen mutual funds which has an expense ratio of 0.30, 0.40, but this one has 0.62, which is slightly average. There are ones which is up to 1%. Other thing is the exit load. So exit load is also not very favorable, so just keep that in mind. And the stamp duty is very standard. The one final thing is the fund managers. I think the fund managers are quite experienced because they have been working in this from last many years, almost 10 years. When this particular mutual fund was started, it was almost 10 years ago. So they have quite well experienced. They know how the things have happened, and they know the history, and they're able to put the money in the right way. So the fund managers are quite experienced. Rajiv Thakkar, Ronak Onkar, Raj Mehta, Rukun and Mansi, they all are very experienced. You can see Rukun and Mansi are new in the team, but the rest of the other three are been in the company for a long time, and they have pretty good experience. So thank you so much for watching this video. I am sure you are able to invest your money in the right way. Please always remember that any kind of investment, whether in stock, equity or in mutual funds, carry some risk. So please do your own homework. Please understand where, how and when to invest, because it is your money, so you have to make the right and the wise decision. Please listen everyone, please read as much as you can, and then do your own decision where and how to invest. It is just what I have done my research, I am sharing it with you. And also remember about happy investing. When you do something good, it comes back to you. The God or whatever you believe in will give you good luck, prosperity when you do something good. So thank you so much for watching this video. Again, have a good day, take care and stay well. Thank you. Namaste.